to discuss the standards that have been issued by SEBI. As always, today we have a stellar lineup of panelists, and we'll try to bring you different perspectives from different set of professionals working in their own sphere of life, and they'll share their experiences as to how they see these standards. And there are a lot of news on these standards. Professionals are reacting on these standards both positively and negatively. We'll try to discuss some of the negative views that we are hearing about these standards. And we'll try to hear about the standards from auditors, from independent directors, from proxy advisors, from professionals. So all of them would be there today to discuss their views. To just to give you a brief overview in terms of all who would be participating in today's webinar, I'll start with Mr. Amardeep Chopra. He's a senior chartered accountant, partner of senior partner at GSA and Associates. So he's there to give the perspective on the as an auditor. Then we have Mr. Amit Gupta, a PCS and insolvency professional, a regular visitor to our webinars. He'll try to give some aspect on as to as a practicing professional, how he is looking into and what is interaction with client is, what are the issues they are discussing. Then we have Mr. GP Madan, who's again a professional. He's a founder of Madan Law Office and M&A Task Force co-chair, SOCHM. He would also be sharing his views. Mr. JN Gupta, founder and managing director, Stakeholders Empowerment Services, well-renowned proxy firm in India. Mr. Gupta, he was there last week also, will share his views on how proxy advisors see this as a medium to achieve good governance. And I believe they have also given a lot of inputs as to how these standards should be derived, and basis which SEBI has considered those recommendations while outlining these standards. Then we have Mr. Dr. K.S. Ravichandran, Managing Partner, KSR and Companies, Secretaries LLP. A renowned professional. He's will also share his views as to how he sees these standards, and will try to clear some air on some of the criticism that the standards are receiving. Then we have Mr. N.K. Jain, former Secretary and CEO, ICSI, and independent actors and listed entity, will share his views on, as an independent director, what are the challenges they face while approving the related party transactions. And then we have Mr. Pawan Kumar Vijay, founder at Corporate Professionals, sharing his views and bringing his own side as to how these standards will help you in aid in improving corporate governance. So this is the lineup of panelists that we have today. How the program is structured. So I'll share. I'll just, because some of the panelists would be joining again today. So I'll give you a brief overview of the standards. And then Mr. Vijay will share some his views on addressing some of the concerns related to standards. Then we'll hear perspective from Mr. J.N. Gupta, Mr. Amardeep Chopra, Mr. N.K. Jain, and as to how they feel from their own views as a proxy, as auditor, as an independent director. And then all the professionals are there, would be sharing their views, and we'll taking the Q&A today. We have already received a lot of queries, and we expect a lot of them to be receiving live during the webinar. We'll try to answer all of them. In case, as always, something is left, we'll reply them separately offline by way of an email. So let's begin with the webinar. So I'll, as mentioned, I'll give you a brief overview again, and then I'll take it to Mr. Pawan Vijay to share his own views on the standards. So layout. Okay. I believe the presentation is visible.
Yes, visible.
Okay. So SEBI in February issued this circular basis which they outlined that ISF recommended standards will be issued by the exchanges, and which would be followed by listed entities for disclosing information on related party transactions before the audit committee and the shareholders. As per the circular, the standards will come into effect from April 1st, 2025. So just to give you a brief overview in terms of the standard, tries to classify the RPT is into different set of and classify into different nature. and basis which then they outline what kind of disclosures are required for what kind of the RPTs. So then starting with material RPTs, which are material RPTs from the context of shareholders approval under the LODR, 10% of the consolidated turnover or 1,000 crore, whichever is less. So if there's an RPT which is a material RPT, it would be subject to comprehensive disclosures under the standard. Then there are RPTs which are required, which are entered with the promoter group, or entities or concern in which promoter group are interested. There a threshold has been given. The threshold is in line with how you determine materiality under regulation 30, 2% turnover, 2% net worth, 5% of the absolute value of profit and loss account basis consolidated financial statement. And then we have residual RPTs, which are not either material RPTs and which are not executed with promoter group or entities or concern where they have interest. And then residual RPTs are also divided into two classes: 1 crore or more, or less than 1 crore. So now coming to the kind of disclosure, the RPT standards outline three kinds of disclosure, basically: comprehensive disclosures, limited disclosures, and minimum disclosures. And in case of material RPT, then in case of all transactions before audit committee, shareholders, all the comprehensive disclosures as outlined under the standards will be required. In case of an RPT which is with a promoter group, or personal entity in which promoter group has any interest or concern, if they are above the threshold under regulation 30, for both balance sheet and P&L items, comprehensive disclosure will be required before the audit committee. In case they are less than threshold, then in case of balance sheet items, comprehensive disclosure will be required. In case of P&L items, limited disclosure will be required. Then residual RPTs, which are 1 crore or more, or 1 crore or less. In both the cases, in case of 1 crore or more, it is limited disclosures. And it is less than 1 crore, it is minimum disclosures for both balance sheet and P&L items. So this is how the matrix is there. Material RPTs with promoter group or other interest, concern or person in which they are interested. And they are residual RPTs, 1 crore or more, or less than 1 crore. And they are comprehensive, limited, and minimum disclosures. Comprehensive disclosures, all disclosures outlined in the para 4 of the standards, the detailed table that are classified into basically it talks about all information of the related party, overall information about the transaction. B1 talks about the specific information about the transaction, and then there are other rows that talks about based on the nature of the transaction, whether it's a transaction with respect to buy and sale of goods and services, making investment, borrowing, lending. Basis each category of transaction, the information have been segregated. Then limited disclosure, para 4, then B2, B3, B4, B8, all the disclosures except these. And there's a minimum disclosure, that the least disclosure: basic details, relationship between the elected party and the listed entity, details of the previous transactions, amount of the transactions, and basic details of the proposed transaction. So the least information is required under the case of minimum disclosure. Comprehensive, all; limited, some information minus comprehensive; minimum, many information minus comprehensive limited disclosures. Then balance sheet items: loans, intercorporate deposit, advances, investment made by listed entity or its subsidiary, guarantee excluding performance guarantee, surety, indemnity, comfort letter, borrowing by the listed entity or its subsidiary, sale, lease, disposal of assets of the subsidiary or of unit undertaking of the listed entity, or disposal of shares of the subsidiary or associate. P&L items: sale and purchase and supply of goods and services, payment of royalty. Promoter group, how you will recognize person or entity in which the promoter group group has the concern or interest. If where the person is a body corporate, the promoter group holds more than 2% of the shareholding or voting rights, or they are the promoter of the body corporate, or the managing director, manager, chief executive officer of that body corporate. Where person is a firm, other entity, the promoter group is a partner, owner, or member, as the case may be. So on basis of these two categories, you will define or identify the person or entities in which promoter group shall be deemed to be have any concern or interest. Minimum information that needs to be provided, as I discussed, comprehensive, limited, minimum. Then in addition to, there is a certificate that is required from either the CEO, CFO, or any other KMP of the listed entity, and from every director of the company who is also a promoter, to the effect that RPTs are entered into a not prejudicial to the interest of public shareholders. The terms and conditions of the RPT are not unfavorable to the listed entity compared to the terms and conditions had similar transactions been entered into with an unrelated party. So there is a certificate that has to be given by two persons. One set of person, CEO, CFO, or any other KMP. Another set of person are the every director who is the promoter director. And then copy of valuation report or any other report that have been relied by the that needs to be relied by the audit committee. All this needs to be placed before the audit committee. Some key information that needs to be considered in case some information is not where there is comments are not required, please indicate nil or NA as a case may be. If audited financial statements of related party are unavailable, then the information needs to be certified by the related party. If the related party follows a different financial year, that this fact also needs to be disclosed. In case of payment where royalty management fees are clubbed together, they have to be bifurcated and disclosed. Minimum information to be provided to the shareholders, all information as provided to the audit committee in terms of the standard. In case some information is of commercially sensitive nature, confidential nature, then audit committee may approve the reduction. This fact needs to be disclosed in the explanatory statement. Justification as to why the proposed transaction is the interest of the listed entity. Statement of assessment by the audit committee that all relevant disclosures required for decision making were placed and that they have determined that promoter will not benefit from the RPT at the expense of public shareholders. This is an important statement that needs to be made by the audit committee. Similarly, audit committee also needs to review, mention a statement that they had reviewed the certificate by the CEO, CFO, KMP, and the promoter director as to the things that we discussed. Copy of valuation or other reports, if any, which was considered by the audit committee needs to be open for inspection. Audit committee must disclose if it has reviewed bids from unrelated parties. In certain cases, there is a requirement of seeking bids. So if that is the case, they have to outline that they have reviewed the bids from unrelated parties. In case no bids were received or were invited, the justification needs to be provided. If no comparable bids exist, the basis for recommending the RPT benefit to the shareholder must be stated. So a lot of affirmations or statements need to be made by the audit committee to the shareholders. Then any additional comment or any other information that the board or audit committee deems fit, that needs to be disclosed to the shareholders as part of the explanatory statement. So coming again onto the broad structure of the disclosures, details of the related party A, details of the specific transaction in B. A, details of the related party, relationship between ownership of the related relationship and ownership of the related party, financial performance of the related party, details of previous transactions, and amount of proposed transactions. B1, details of the proposed transactions. B2 is consisting of specific information with considering the nature of transactions, that is both balance sheet and P&L items. So this is how the entire RPT standard has been structured. I'll now invite Mr. Vijay to share his views.
Good afternoon, friends. Friends, as you are aware, that today I'm addressing and raising some points of view, which in after the release of industry standard on minimum information to be provided by the review of the audit committee and shareholders approved for RPT. Now, as a chairman of subcommittee, when we have a 22% strong group from industry, from representative of FICCI, SOCHM, CII, and various professional, and the advocate and the proxy advisory and various other professional has participated in this. Now, no doubt when there is a new thing is coming, new status quo is breaking, it's always a issue. And I was thinking that everywhere when the law is enacted, especially in India, law is always not proactive but is a reactive. Internationally, if we see other part of the world, you will find in all the places you have all the jurisdiction like USA, US, EU, China, Japan, Singapore, everywhere there is a mandatory disclosure, audit committee approval, shareholders approval, independent directors role, and the penalties in all the related party violations. Now, if you see this, and some of the, it is not that fraud is taking place in India, in other jurisdiction also. In USA, we have seen there was a Tyco International Scandal 2002, where the executive misused and transferred the various fund of the company through the various undisclosed RPT and small companies. We have seen the Tesco accounting scandal in 2014. They have inflated profit and manipulating supplier-related RPT. We have seen in EU companies. We have seen in China also. Luckin Coffee scandal in 2020. Fake sales transaction with related entity were used to inflate, and in Japan and Singapore, everywhere something or other has taken place. In India also, we have seen ILFS case, we have seen the DFHL matter, and we have seen Yes Bank and the Reliance Home Finance. All these places, who has what they have used? They have used the related party for this particular transactions. When we were discussing with SEBI and the SEBI chairperson was there and she was mentioning about, then she was saying, I'm not concerned about the LODR, I'm concerned in LODR the RPT. And she has given various examples that how the manipulation and siphoning is taking place, and the tool is RPT. Now today, when we see this industry standard, so I just tell everyone that in India or in any part of the world, if something new is coming, and I remember, and I'm just confining to the capital market only because this is connected listed company. When online trading came, everybody was all the brokers, they were apprehensive. Dematerialization came, the people were saying it will kill the stock market, but it has happened differently. When demutualization of stock exchange has taken place, then the board member and other people has also opposed that this will create a problem. Bank holding had reduced, then the promoter, those who are having a heavy percentage of more than 15%, they were creating problems. Then public and private companies shares dematerialization issue came. Then people have objected. They made so many issues. You remember in 2013 when the new companies that came and the directors of listed company restricted to 7, then there was a hue and cry, and the logic was that how you will devote time and how much you can do this. So friends, everywhere this is happening, we have to understand that there is no free lunch. If you have a private business, nobody is bothered what you are doing and how you are doing. Only tax authority is concerned that you follow the law of the nation relating to your disclosure confined to the income. But when you are becoming a public company, then you are getting various advantage of perpetual succession. Then bank is also embracing you for giving loans and other thing. Then the cost is that you have to disclose in the ROC your income, your balance sheet, your transaction, and everything. So this is a process which is everywhere going on. Now, when this standard has come, and I was a chairperson or chairman of the secretary standard board of Institute of Company Secretary, and when the SS1 and SS2 came, we came out. Then people have objected about that standard also, and the standard purpose is that there should not be any confusion. That I will share with you in my second part, that how it will be useful for company management, independent directors, the shareholders as well as regulator, and you will realize that yes, it is really useful. So I'm just starting with this point that no doubt there's a new things, there's a various questions, and we have discussed with SEBI from Industry Standard Forum side if there is any confusion or any multiple interpretation people are still following or misunderstanding on that point, that we will definitely come out with some clarification format. And we have discussed SEBI also that this is the standard, and every year we should review this, and whatever practical problem, what are the new things, what are the other things should be added in this. So that will take place in future. But today, if I can confine to this standard on RPT, then the issue is coming. There are some criticism on the basis of various aspects which I want to address to everyone. Now, first concern was that it is too lengthy, too detailed, making compliance cumbersome. Friends, no doubt it is lengthy, and people are talking this also, that we are doing various transaction of a small amount and we have to give this. So the question is that why we are doing a small transaction with this RPT. The everybody is talking. Whenever you are going to the taking a balance sheet and going for a public issue, the investor, p investor and other investor, they are not seeing anything. They are seeing how many RPT transaction you are doing in the company. Even if you have given loan to the company uh, without any cost, that is also, though it is a RPT, but that is also a question mark, that why you are giving free to them. Maybe 90%, 99% people may not follow this. 1% may be following, that they are giving for the benefit of the company, but there is a concern. So the issue is that why you are doing this, and this lengthy it looks like, but it is not that everything is applicable to you, everything, because Ankit has shown you the transaction is divided into three parts. One is detail of the related party and transaction with the related party. So the first format is that whenever you are coming out with related party, you have to tell which who is the related party. We have seen, and SEBI has given and NSE has given this data, stock exchange has given this data, that company, the related party which is doing transaction, it is a very small, and transaction is of 1000 crore, 2000 crore. It is not justifiable that you form the company and do this. So detail of related party transaction with the related party. So you have to give detail of this, basic detail of the related party, relationship with the ownership of the related party, what is your relationship with listed company and what is the ownership, who owned this company, financial performance of the related party. Just now I gave example that company is very small and you are doing a big transaction. Detail of previous transaction. Now you have done earlier transaction, you have given loan and they have defaulted. So the related party, you have to tell that what is the your past performance. You have given something, and then you are not in a position to substantiate that this transaction which I am doing will be beneficiary. You, so that's why they want to know what is the previous transactions fate, then amount of the proposed transaction. So these are the five things in the detail of about the related party. Second is detail of the specific transaction. So a specific transaction is divided into two parts. One is common for all, that is B1, basic detail of the proposed transaction, and then B2 to 8, that is a separate transaction like sale, purchase, loans and intercorporate, investment, guarantee, borrowing, sale, purchase, lease, and payment of royalty. Now these are the things which are divided. So that's why it is looking bulky. But if you are doing investment B4, so then B2, B3, B5 is not required to give. So intent behind the detailed requirement is not to overburden the company, but give a uniformity, transparency, and accountability. Previously, Audit Committee lacked a structured framework to analyze RPT. Now, earlier, what was happening, that the management was also not aware what information I have to give, what information I have to not give. And Audit Committee is also not aware that what is my scope and what is my limit to ask about this transaction. Now, this is a clear-cut structure that audit committee will get all the relevant information to take a judgment. So they can analyze and they can approve. So weak assessment is out. Format ensure that all material aspects of RPT are considered, because whatever specific point, whatever about the related party, about their transaction, about this transaction, everything is clearly so there's no discretionary omission and discretionary power to add certain things. And sometimes people give bombardment of information that is also not required. You should give only relevant which is asked. And the level of detail is necessary to prevent manipulation, because large corporate RPT are used for profit shifting and financial misstatement, because various transaction has shown this. Next. Now, the next is that are RPT being over scrutinized? RPT is not being over regulated. Rather, they are being more transparent now. So earlier, we have seen RPT, ILFS, SUPTEM, DHFL, they have used RPT for this. So regulatory scrutiny is not coming in vacuum. It has come because of the response or repeated misuse by RPT by controlling shareholders. And there is a question that it's not an elimination of RPT, but ensure that only fair, transparent, and justified RPT should take place. Next. Are some requirement unrealistic? Companies comparing royalty payment with three industry peer is impractical in case where there no exact peer exit. So people are saying this, but actually we have given a complete hierarchy of this, that you have to compare the listed company, then you have to compare with the unlisted company, international listed company, then you have to compare the market related industry research analyst things. And then even if it is not there, then you have to write that there's no peer available, that you have to mention. So it is not compulsory that you have to follow three peers, but you have to follow the hierarchy. And if there's no, like take example of Zomato, when Swiggy issue came, then there was only one competitor, that was a Zomato. So they are writing only one competitor, remaining competitor were not there. So that's why it is like this. And SEBI register research analysis is added, because sometimes what is happening when the analysis report is coming, they compare, and if you are not finding any company and analytical report is there, you can take out. So it is giving a direction to the audit committee and people, those who can see this, that what is correct, what is not correct. Next. Redundant certificate, some CEO, CFO, now people are saying. So the point is, if CEO, CFO are responsible of financial disclosure, the audit committee is taking decision who will approving. That is, audit committee is approving. Then on which ground and what basis you are giving data? Tomorrow something is going wrong, everybody will shift the burden to each another. So it is better that CEO, CFO certificate should there. And in the additional point is promoter certificate, that is any promoter, because in the entire thing, SEBI is more concerned about the promoter oriented related party, not the other things. That's why they have said that if the promoter is there and the balance sheet item are there, then you have to disclose more. But if the promoter is not there and joint venture is there and other subsidy is there, then you have to reduce, you have to give less information. So the certificate is, because it is giving clarity of certifying this transaction that this is fair and all information are correct. So independent director will not have any burden on them that I have accepted without any figure. So they are giving all the data, all the information. So that is there. Next. The audit committee and risk aversion. Audit committee may reject genuine RPT to avoid scrutiny. It is not. The role audit committee is not just to approve transaction, but to ensure that this is fair. If RPT is truly beneficial to the company, then and it is sufficiently justified for the approval, then who can stop? And and the audit committee avoid transaction out of fear. It suggests that governance need strengthen at the audit committee level, not the relaxation of disclosure standard. So if audit committee is not able to take a decision on this basis, which is more structured now, which is more detailed one, then why they will reject? They will accept because now all the permutation, combination and the manipulation is removed. Next. Are shareholder being overloaded or disclosure? Shareholder may or not have the expertise to analyze detailed valuation report. Yes, all shareholders are not reading balance sheet. If it is going to the public, then the proxy advisory, then other analytical, other institutional investors, they read, they recommend, they suggest. So if the shareholders are expected to vote on certain things, they must know that what is the information and how this transaction. And without disclosure, manipulation can occur or selectively presenting information in favor of those who are getting advantages. Next. R&D justification. Now, why there is a in royalty, there was a clause that royalty payment you have to do. So the question came that what is the sunset clause? Royalty payment you are doing continuously for years without realizing that what is the advantage of this royalty is the listed company is getting, you are paying. Second, we are talking about the self-sufficient Bharat. Now the question is that we want to make our country self-sufficient, and you are spending money for paying outside, but you can't start your own R&D. That is a question. So that's why this has come, that you write this, that how much you are spending. You are paying royalties, say 100 crore to the parent company, but whether you are doing something to reduce that payment, and by doing R&D, answer is no. Then why you are not doing this? If you are doing this, then reduction will take place and you can have more money will remain with the company just by saying transferring. And there are some example that where the company has taking giving royalty in the name of various things, and there's no advantage or disadvantage. Impact assessment is there. That's why it has come. Next, the routine transactions being disrupted, the requirement to justify why RP chosen over the lowest bidder, ignore business reality. No, this is a misconception. Nobody is saying that you select lower bidder. The only thing is the framework is saying you choose the lowest bidder if only requires AC to ensure that premium paid is justified. It is not that you have to select only lowest. You select the highest one also, but you have to justify that why you have selected. There's a possibility three bidding, the person who is giving lowest is not a capable, not have thing. So you just write this. So if the company prefer RP over the low price vendor, it must provide valid reason. It is not restricting or it is not disrupting the things. Next, the point is there was a clause, there was a saying that are these standard formulated to kill RPT? No, RPT are not being prohibited, so but being regulated to ensure fairness. If the company cannot justify an RPT, it means the transaction is either not necessary or not fair to public shareholders. The goal is not eliminating but prevention of misuse. Now somebody asked me that I have a small transaction for this, I have to fill this entire thing. The question is why you are doing this related party for this small thing. You can buy from the market, and there is a very good example which other speaker last time they have given. They ask simple question: if you are going to the market and doing something, then what transaction you will do with the third party? Will you not negotiate? Will you not try to get the maximum benefit to yourself? Will you not try to get the maximum things for this transaction? Everything is a part of this. So the standard is not to kill the RPT, but standard is to formalize the RPT. So these are the some of the views which are hovering around in the market in the newspaper article I have tried to give. But now I'll tell you what are the advantages of everybody will get, that everybody should understand that part. Shivam, next. So how the RPT standard empower key stakeholders. That is number one. Audit committee to gain better oversight. Now audit committee mean independent director. They gain better oversight and approve more. Management mean CEO, CFO, and the KMP and other people, those who supply information, including promoter of the part of the management. Management benefit from clear compliance pathway because they are aware that what you have to give, what. So today I'm seeing so many chartered accountant and company secretary here. Today, when you have to give information, then you were not clear. Suppose management or somebody is saying those who are interested in this that don't give this information, don't show this, show this. Your hands are tied because you have to, you sometimes you are confused also. But now this is a system, so you are also very clearly defined that what information I have to give and what information I can't avoid. So all these things are there, and that is coming properly, so you are also beneficial. Shareholders enjoy stronger governance safeguard because yeah, they are getting every information. Regulator is also enforce compliance more effectively because now they can see what information has come, what information has not come. So first is just understand audit committee and independent director, how they will get advantage. Shivam. So benefit of audit committee and independent director. Number one is standardized RPT disclosure. I was talking to various independent director and I was asking them that before this, how you were doing this. So there was a no starting to end point. What information they should get, what information they should not, they are not getting, what information they should uh, finalize. Every company is doing their own planning, own style, own thing. Now standardized RPT disclosure, all the independent director, whether they are in 5 company, 2 company, 3 company, they are aware that these information will come. It will be a win-win situation for them, so they have a uniform structured disclosure format. They have a greater clarity of decision making because all information which are required, that is there. I'm not saying it cannot manipulate it, but large amount it can be drastically reduced. Mandatory certificate of CSCFO and promoter director will help companies in the independent director to take a decision, and they are greater assurance they are getting. Strengthening audit committee role. By doing this, audit committee is not wasting their time to get the information, this information, that information, in to and fro. But now they can divide this. And another point is the audit committee has a right, if they are not satisfied with any valuation report, any things, any other point, they have a right to get information from third party also. So now by doing this, in my opinion, it is win-win for independent director and audit committee, that today SEBI is very, very proactive. If you are a director, you resign, if you are doing something, they will ask you why you have resigned, why you have done this, what contribution you have done. So any auditor resign, they will ask why you have resigned. So today the SEBI is not accepting this, that you just cite your reason that I am resigning and going out. They will ask you. So that's why you have a sufficient uh, point with you to manage this. Next is advantage to the management. Management mean KMPs, the CFO, CS, and other people. So the compliance uncertainty is not there because you have clearly what I have to provide. Initially, you will face multiple things because you say status quo is breaking. Enhance corporate credibility. Now, transparent RPT disclosure will enhance credibility because you can do with solid basis that I'm doing this RPT, I'm disclosing everything, and then decision is taking place. Internal streamlining is taking place. Protection from regulatory penalty because now you are taking a call on the basis of clear cut demarcation. Next, the next advantage to the public shareholder, they have a greater transparency they will get. They will approve, enhance approval right they will get because all information are there. A stronger safeguard against promoter influence, that is also there. fair valuation and pricing is there, and more investor confidence will come, and company which is always people always skeptical about RPT will get more advantage. Next. And then regulator. Now, if the regulator is seeing that all information are there, all information is in a structured manner, then why they will raise a certain issue until as there is a some wrong thing has happened. The companies can and then reduce scope of regulatory arbitrage also. Sometimes what is happening, people take advantage of this way and that way, that can be removed. Efficient regulatory oversight, because regulator can see and the transaction if they want to check, so they will not come to your office and check everything. They will see the prima facie format and it will help them prevent financial misreporting. That can also divide in this manner, and it can be very useful. So friends, ultimately the entire thing which I have discussed with you, it is happening. The global RPT regulation also emphasize transparency, fairness and governance. US, UK, UE, and strong disclosure and approval mechanism is there. China, Japan have a strict state control over companies and financial transaction. Singapore imposed strict penalties on the fraudulent RPT. While approach may be different, all major economies mandate disclosure, independent oversight, and safeguard of the prevent RPT abuse. That is there. Everybody knows this. I know this is my view, and I have a strong conviction that I'm saying all these points which we have discussed, which we have finalized. We have a 3 and 4 months strong work on this particular thing, and then we have finalized this. I know so many questions are coming today. That day we had 100 questions, but when we analyzed, it was only I think 25 questions were common. Today also I'm seeing various questions which are common, and we will give answer. So before going to this part, I'll request Amarjit Chopra sir. He's an auditor. Uh, he was a past president of Institute of Companies, Chartered Accountant of Institute of Chartered Accountant. We want to take his view also, because as a auditor, he has a more responsibility now. So how this standard will help, and what other things. Then we have Mr. N.K. Jain, who is an independent director, and we will try to ask his view that if everything is coming like this, how he will feel. Over to you, Amarjit sir.
Thank you, boss. Thank you, Vijayji, for a very, very exhaustive coverage of the entire subject. And of course, my first thanks to you that you included me in that group also. You see, my role is not limited to being the auditor. I think I am also an independent director in few companies, including a few of the listed companies for that matter. And believe me that I personally always felt that was my sincere desire that there's something like minimum requirement what the management is required to do when you have to disclose the information with regard to the related party transactions. What the group has done is an excellent job. Let me put it this way. Criticisms will always, I think, whenever the status quo gets changed, criticisms will always come because there may be certain people who want the status quo to continue. But if I look at it both as an auditor and as an independent director, I will give both the views. As an independent director now, I know what minimum I am going to ask to the management to present before me. As an independent director, I used to ask the questions, no doubt about it, but there was no specified format for it. Now, one can say that, is it the only thing that I am going to ask to the management with regard to the related party transactions? The answer is no. This is not the only thing that I am going to ask. If I have more suspicion, and if I personally feel that something else requires to be disclosed, or something else requires to be known to the independent director, he should ask for that information also. Because what we are saying is that this is the minimum information. Let's be very clear about it. We have not said that this is the only information which requires to be given to the independent directors or to the audit committee. So I, as an independent director, feel very secure that this is the minimum information which will at least flow to me now, which no management will be able to deny. You see, it is as good as I can compare the situation when the accounting standards were not mandatory under the Companies Act. We used to go to the companies as auditors, and the company will say that these accounting standards are mandatory to you, not to us. You may do whatever you want to do. Today, by bringing in this standard and making it mandatory, I think we are binding the management also. We are binding the CFO, we are binding the CEO that this is the minimum information. And when they come before us now as independent directors and as auditors also, they cannot say that they have not evaluated this particular information. Because you see, what has been happening is that we have been only talking of Satyam, we have been talking of ILFS, we have been talking of DHFL. What happened in Reliance Capital? What happened in Reliance Home for that particular matter? If you start looking at all these companies, what happened in Coffee Cafe Day? All these companies have suffered and they manipulated all the accounts based upon the related party transaction, where these investments either were not desirable, and if these were desirable, were never impaired when these needed to be impaired at a particular point of time. I think all these answers we are finding in this particular standard somewhere or the other. I have always believed in one thing, Vijayji, that if at all someone feels that this is too much of an information, probably someone can come. No need to sit tight on it. And one can say, okay, that if this requires a change, let it be changed. I look at Companies Act 2013, if you ask me, Companies Act 2013 is nothing but a symbolic change because of the Satyam. And that is why this particular act has undergone certain changes subsequently. So has anybody said that those changes will not come? The answer is no. Because whenever there are certain things which are happening, which are malpractices, you want to cut those malpractices. Directors say that these scams are only exceptions, and this you cannot make rules for the exception. I don't agree with that. I think the related party transaction scam is rampant, if you ask me. So it is not by way of exception. Even in the good companies, this is not by way of exception. I think the kind of related party transaction which the corporate world is seeing, we need to actually come to some conclusion. We need to come to certain reforms with regard to that. And whatever information has been asked, whether by way of valuation report, someone can argue about the royalty, etc., and its comparison with the R&D expenditure. I think that's one fair point which can be made out by somebody, that I want to pay royalty. Why should I get into the R&D part? Fine. The self-reliant part of the Indian may be all right, but I think that cannot be stretched too far. But so far as valuation reports for acquiring a related party, so far as entering into a transaction for sale or purchase with a related party, so far as giving an advance for purchase or sale, particularly advance for purchase to a related party which doesn't have that kind of a turnover even. I think all these need to be answered through some standard. Otherwise, the accounting standards would not be there. Otherwise, the sectorial standards would not be there. Otherwise, the auditing standards would not be there. All these standards are meant that the information which is to be provided or which is to be sought is uniform in nature. And there is not too much diversity in seeking that particular information. And I think this particular standard is going to lead to that particular direction, wherein the management knows what is to be done. Today, independent directors ask for certain information. Management would say, why do you want this information? But if it is a standard laid down by SEBI, I think why it will not be questioned. In the longer run, everyone will say, yes, it is fair. Today, when the auditing standards have been made mandatory under the Companies Act, auditors feel more strengthened. Believe me, today, I feel more strengthened, because nobody can say me that why you are asking for the creditors confirmation or debtors confirmation. I say this, there is a standard which is mandatory on me and you also, basically, which is to be complied with. And this standard is under the Companies Act. Similarly, if SEBI has said that this is the minimum information which is to be provided by CEO or CFO, and it is to be certified by them, I think this is a very, very welcome step. Believe me, that's the way I look at it, both as an auditor as well as an independent director from that angle. So to me, if you ask me, in both capacities, as an auditor and as an independent director, I feel more secure, I feel more safe in the conduct of my audit and in the discharge of my duties as an independent director. Because what one has actually seen as an independent director and as an auditor is that related party transaction has some kind of hidden agendas, basically. And that hidden agenda may continue to be there, but I think ultimately it will get mitigated to a very large extent. We will not be able to eliminate everything, every malpractice or every evil. But even if we are able to control it to a certain percentage or to a certain limit, I think that's a welcome change. And over the years, when this gets streamlined, I think everyone will know what is to be done with regard thereto, and I think it will get refined in the times to come. There is no, I will not say that it will remain stagnant. Refined over a period of time, and everybody will be benefited by that. That's my, those are my views, Pavanji.
Thank you, sir. Ankit, Mr.
Jane
Jain,
Gupta ji has also joined.
Jain Gupta sir is in. Jain Gupta sir was. Sir, can you briefly tell, because I know you.
Hello.
Yeah,
Pawan,
yeah.
yeah, I concur with Mr. Chopra on what you have said. The issue is very clear. I have been hearing a lot of noise and hearing everything that there are hundreds of transactions, an audit committee will be overburdened, something. So my first question would be that what is the need for doing 100 transactions with related parties? All the 100 transactions that are being done by related party, can it not be done by unrelated party? Then the moment you say that even dhania, mirchi or pan masala you have to buy from the related party, that means there is something which is inherent in your decision to go for the related party. That is one part. So I never buy the theory that there will be hundreds of transactions with audit committee. Audit committee should ask the first question, why you are doing this transaction with related party? Is there no unrelated party available? That is first. Second thing is this, that all the time there has been saying that there are so many points to be done for the audit committee. Somebody says 80 items, somebody says 40 items, somebody 90 items. Now all this is just trying to bloating away the problem for the simple reason. When you say give me balance sheet of profit and loss, then somebody will say balance sheet has got 20 items, profit and loss got 40 items. So you are seeking information of 60 points. The issue is that the format says give me net worth, give me turnover. So if you count everything as single item, then you are unnecessarily increasing the count. The third and most important point that I say, that when you are doing any transaction, would you not want an information about the counterparty? And what information you will need from the counterparty who is not unrelated, who is unrelated to you? So at least minimum that information you will require in relation to the related party. Now somebody says that what is the need for the turnover of the opposite? I agree. If you say that, then if you are doing a contract with an unrelated party, do you not want to know what is the financial strength of that party? I had sent to the group yesterday a report that we have done on Hyundai. Now, in Hyundai, we found that a transaction of 3,000 crore is being proposed. Company, promoter owned, and the company has assets of 11 lakh only and 10 employees. Now, with a 10 employees and 11 lakh rupees fixed asset, how you are giving a 3,000 crore rupees contract to the related party? And we found that not that related party is not executing. After that, there are two more related party in the string. After that, the fourth party is the actual executioner of the contract, which is a local party, which is not a related party. So you have created a structure where after you, there are three related parties, and then the fourth party is executing. Now, how the hell shareholders will evaluate what is being done, what profit has been transferred, and how much money is gone for the company? And my problem is this: if audit committee has approved this transaction, that means I have to question the audit committee. Did you not evaluate what is the strength of the counterparty? Will I or you give a 3,000 crore rupees contract to a party which has 11 lakh rupees in the fixed assets and only 10 employees? So that is my point of view. So let the halla be there, but unless until, and my always I will say that problem is that maybe the regulations are tough, but regulations are tough because except SEBI or somebody, nobody is pointing fingers. If the industry starts pointing finger at the wrongdoing of others, probably regulation will become diluted. But since we have not doing this, then it will be the regulation which will be the strictest regulation for a person who is not compliant. So all people who are good will have to suffer. Like I always say, that none of us are like a terrorist, but at airport we are treated as a terrorist because somebody was a terrorist.
Pamanji, over to you.
Sir, Ankit,
Yes,
please.
sir. I think Jain Gupta sir is there.
जैन गुप्ता सर ने
Did
बोल
you,
लिया.
did you hear me or I was just
There
speaking
was
to
some
wall?
interruption last minute.
नहीं नहीं बिल्कुल क्लियर थे यार.
Sir, okay, I think now we can have Mr. N.K. Jain to share his perspective. He is also independent director in many listed entities.
Yeah, thank you, Ankit, and thanks, Pawan. Congratulations to you for doing a wonderful job. Uh, uh, as far as perspective of an independent director is concerned, this standard certainly provides uniformity and consistency in disclosure of information, and such disclosure, which is based on such lengthy formats, it will help independent directors certainly to read, to examine, to understand, and to analyze the transactions and to arrive at very informed decisions in the best interest of the stakeholders. The information on these formats will over a period of time replace the selective information and selective disclosures which were provided to the audit committee for taking decision on such related party transactions. This is certainly going to improve the governance standards in dealing with the framework of related party transactions. It will not only improve but also substantially strengthen the disclosure regime, the disclosure and the reporting and understanding of related party transactions in the best interest of the minority shareholders. I think the master stroke is the CEO, CFO, and promoter director certificate. That the RPTs is not prejudicial to the interest of the shareholders. That puts a huge responsibility on them to ensure that the related party transactions complies with the regulatory requirement. But I have got certain concerns. I discussed with certain people. Change is always painful, and this is going to be painful. It's not going to be easy and smooth drive. Companies will really take a lot of pain to come to the level when they accept it willingly and proactively and follow it up. But this is going to be definitely painful. Now, certain concerns which have been mentioned by some other speakers also, that 88 parameters information is very lengthy, it is very cumbersome, it's extremely challenging for the audit committee and the idea is to study and examine it within a limited time framework. Generally, what happens, and I think that will certainly change, the audit committee meetings are held just before the board meeting for approval of accounts. That's a general practice. I mean, it might take 1 hour, 2 hours, 3 hours for the audit committee to approve the related party transactions, to approve the accounts, to deal with the internal audit reports, and so many other issues. But with this kind of information to deal with the arriving at a decision on related party transactions, I think it will need a lot more time, and that structure will have to undergo a change. Certainly, it will increase in the cost of compliance, which is a concern of the industry. So far, this standard has not come into force. Once post 1st April 2025, first they are required to make the report on this, the disclosure information on the revised standards. Then perhaps the real test will come. So it certainly increases the cost of compliance. Now, one thing definitely which some of the people have raised the concern is the will AC sit over the business judgment of the management? You know, at number of places, this kind of a concern has been expressed that what will be the framework in the new dispensation? Management has taken certain business judgment which they are placing before the AC. Now, will AC sit over the business judgments? That I think time will tell us how does it work it out. Now, this is also a huge concern that will it slow down the decision-making process with such a huge information disclosure requirement, and with also such a huge responsibility on the AC and the independent directors to study, examine, analyze that information. It's not going to be a cakewalk. It will require a lot more efforts, lot more time, which is expected of them. So will it slow down the decision making is also one of the concerns. Now, some of the points are that if CEO, CFO, or promoter director do not give such a certificate, what do audit committee do? Does it not approve the RPT? Does it send back the RPT back to the management, or does it reject the proposal? So that will have to be assessed. What will be done? Now, in spite of considerations of such a detailed information, which is disclosed in these formats, if the audit committee feels that yes, this is fair and okay, but ultimately it has been found to be unfair, then who will be responsible for this? You know, that's a point which we need to really understand. Then, Ankit,
Yes,
in
sir.
item B111, it is stated that if any valuation report has been considered, it shall also be stated whether the audit committee has reviewed the basis for valuation contained in the report and found it to be satisfactory. Now, I don't know whether the audit committee members, I mean, some may be, of course, chartered accountants, but to assess the valuation report, you need very specialized skills. So in this, the onerous responsibility which has been put, the audit committee has received the basis for valuation contained in the report and found it to be satisfactory based on their independent evaluation. Now, that how does audit committee discharge this particular responsibility is a matter. Similarly, in item B2, bracket 14, where bids and quotations are invited, it says audit committee to provide justification for rejecting the best bids through quotations and for seeking the related party, for selecting the related party. Such justification. Now, you know, this onus is being put on the audit committee, that why are you selecting this particular party? Such a justification should come from the person who is making a proposal. Proposal is being made by the management. So management should put up such a justification that why they are selecting such a party, and audit committee will take a view whether that justification is right or not. If audit committee is justified that the justification placed by the management is meeting is convincing, they will approve it. Otherwise, they will reject it. So
Sir, sir, I will tell you, there is a misconception that audit committee, whatever audit committee's hands are tied and they will receive information and they will yes and no, they will do. It is not. Audit committee can ask any information. Suppose this point which you are mentioning, it has come to the audit committee. Audit committee can counter question to them, ask them that please verify this, please certify this. So this certification one is which the people are the regulator is saying this should be given, but any other information which you want, that I want a confirmation from management that why you have selected these parties, you can ask them.
No, I
Pawan,
know. I mean, audit committee may ask for the information, but that
Yeah.
justification should come from the management.
Yeah, you can ask justification, sir, from
Justification
management.
should come from
I think
because
the
it is
first
not written.
justification will come from the management itself, that the audit committee has to review whether a
Yeah,
justification
that is
is
right.
right or not.
But the way it has been put here in B214, the audit committee has to justify.
Yeah, so if they agree with the justification, then that would be their justification too.
So if I mean
okay.
maybe it is.
Gupta ji kuch keh rahe, Gupta ji aap kuch keh rahe?
Pawan, I want to add something.
Yeah.
See, I always hear the problem कि audit committee के पास बहुत time, बहुत काम है, audit committee cannot do this, audit committee cannot do it, and all that. And then Mr. Jain has added one more dimension, that if suppose the CFO or compliant officer, everybody is not giving the certification. Now that means on that particular transaction, there is no unanimity in the organization itself. If there is no unanimity in the organization itself, then the choice is either you send the resolution for approval to the shareholder or you don't send. Now, the problem that Mr. Jain is saying, suppose I am a person man in the organization and I say no to everything, then can the organization be brought to the standstill? Obviously, it cannot be brought to the standstill. So there has to be provision that if the certification is not there, we say it is not there, but shareholders have to be told that this is not available, it is not coming, and let the shareholder decide. But the biggest problem that I say, that audit committee is not able to decide or something like this, it cannot be accepted, because audit committee doesn't consider the consults of interns that are not experienced. They are experienced, they have got power, and if they do not want to go ahead, they will not go ahead. Now imagine a situation, if I say that the board or the audit committee or the CFO or compliance officer is not able to decide on the transaction, then how do we expect that shareholders who have got lesser information than them can decide on the transaction? So the idea is very simple. Audit committee has to examine the transaction in detail, comfort themselves with the transaction, and only when they are comforted that the transaction is required with the related party and no other party can do this transaction and it is in the interest of it, then it should go ahead. If at the first stage itself I ask a question that why you are doing it with related party and you fumble, then I will say, okay, get lost, I'm not going to approve this transaction. The issue is very clear. I got to be first thoroughly convinced that this transaction cannot be done with any other party, or if I am doing it with related party, I have got substantial benefit of going ahead with the related party. Otherwise, why do it? Okay, thank you.
Yeah.
Well said, Gupta.
Ankit, I'll also come to
Yes,
item
sir.
B3 21, interest rates charged. Now it says if the interest rates charged to the related party is less than the average rate charged, then the audit committee to provide justification for low interest rates charged. Again, the same point that justification should come from the management. Audit committee should evaluate whether the justification provided by the management is right or is convincing or not convincing, and for that audit committee can ask for n number of information. That's not the issue, but that justification has to come, because this formulation in my view needs consideration.
I think,
Now,
sir, in lot many cases, owners have been put on the audit committee ultimately
no,
because they are the decision makers.
but audit committee is not in the day-to-day management of the company. I mean, ठीक है, Gupta साहब ने जो point कहा है वो ठीक है. That is okay. Audit committee has enormous power; it can do. But that to put that justification in place, you need to examine tons of papers, which may not be possible. You have to take a practice.
I think, Ankit, I would also like to say that what Jain Saab is saying is absolutely fair. That if the rate of interest which is being charged to related party is lesser, In that case, firstly, it is the management's duty to come up with the explanation why it is lesser compared to the unrelated party. And then the audit committee will evaluate that. Audit committee cannot have its own rate of interest in under any circumstances. That's very clear.
Madan sir, can I come here?
Yes, sir, you can add, please.
Please,
Yeah,
sir.
I will say, please understand, the regulation or the standard are saying that audit committee has to provide justification to the board or justification to the shareholder. Now, whether this audit committee provides this justification based on the justification given by the management or by their own wisdom or by any consultant, ISF cannot write everything. What is written here is what is the final word. The final word is the audit committee has to justify to the board or to the shareholder. Now, on the background of this, if audit committee has a report of a consultant or audit committee has a certificate from the CFO or the management, I have no problem. I don't want to get into 20 other layers down below. I am fixing my responsibility at audit committee, and I'm saying I need a justification from the audit committee. That's all. So let us not confuse the point that who gets the certificate. I may take certificate of 3 different people in the organization. If I am audit committee chairperson, I say, okay, I want CFO certification also. I want managing director certification also. I want company secretary certification also. That is my job, what I want to do. But my responsibility is that I need to give a certificate that I feel that this resolution or this transaction is justified, and this is justified because of this reason. That's all.
Okay, sir. My one humble request to all the
One or 2 points more, and then I'll conclude. Item B3 within bracket 30, item B4 within bracket 36, and item B5 within bracket 48. It says if credit rating of related party is not available, audit committee to comment on credit worthiness of the related party. Now, to ascertain credit worthiness of a particular company, if whether it will be a function of the audit committee or not, I have my I don't know how to go about, and therefore I will very strongly suggest, Pawan, that this webinar is okay, but I think you must conduct a workshop of independent directors, how to discharge this onerous duty and what all they need to do, how they need to upscale their skills in the various fields. Now, there is one more, at one place, Ankit, you have very clearly said in the standard, item B3 within bracket 33 and item B5 within bracket 50. This is default in relation to borrowing. It says in case of default by the related party over the last 3 financial years, in relation to which the listed entity has previously provided guarantee, the management has to submit justification to audit committee for the proposed transaction and the capacity of the related party to service the debt proposed to be given by the listed entity. So the audit committee to comment on the justification provided by the management. So this, in my view, is the right formulation, which should be there at the other places. Royalty payments, I have a very strong feeling that whatever has been said, Mr. Amarjit Chopra also said, in India, research and development is practically nil. In some of the corporates who are showing the expenses on research and development, it is only cosmetic. In real terms, the research and development in India is not there. The sense is that why do we reinvent the wheel? Something which has been invented, let us pick it up, start our business right away with the technical tie-up. So now this comparison with the royalty payments by other companies, etc. I wish it is okay. So these are broadly the points, Pawan, that I want to.
Okay. Okay.
Thank you, sir. Thank you for your points. I think we will now move to the epic.
Ankit, because this webinar, I was expecting that I should take a view from Ravichandra and Madan and Amit. But now this program we have organized only for the Q&A session. So it is better because last time we received 100 questions, so we have compiled and clubbed this. So it is better we should start Q&A, because Ravi Chandran and Madan answering the Q&A is very important. So please start Q&A session.
Yeah, I'll ask the team to put the slides on the Q&A. We've already received the questions, so we'll put them one by one on the slide, and then we'll ask for the views of the panelists. So I think one of the, okay, let me start with the first question. It says that the standards shall be applicable in respect of RPTs entered into by listed entity or an after April 1st, 2025. Whether it exclude RPT entered into by the subsidiaries of the listed entity, even though such transactions also require approval from the audit committee of the listed entity. Yeah, I believe it will include the RPTs entered by the subsidiaries of the listed entity.
It will include.
It is
will
covered.
definitely include.
It is covered. I think Shivam, move to next. Shivam, next question.
So this is
Does
next
the
question.
standards apply to SME listed companies given Regulation 23 is exempt under LODR regulations? Okay, so I think there is already board decision. SEBI has made a decision of extending certain provisions. Necessary amendments will be issued. So once the amendments are issued, then the provisions will be applicable. Next.
So, Ankit, the one thing I would like to say is that
Yes, sir.
if you are a listed entity, even on SME,
Yes.
after all, there is some public interest involved.
Yes, sir.
No, it may not be in that detail, but RPTs, the objective of the RPTs basically,
Yes, sir.
or the regulating of these RPT transactions is the same. It has to remain the same. So I think the independent directors, even in those companies, will have to comply with it. I don't think that they can be exempted from it.
Sir,
That's the way I look
currently
at it.
there is an exemption on SME listed companies.
I do agree with it,
Yeah.
but I personally feel that you can't say that SMEs can divert the funds through the RPT.
Definitely.
No
I
way,
think
no way we can say that.
so. That's already SEBI has already considered that and approved in their board meeting.
Yeah,
I think only the necessary amendments are pending.
Yeah. Okay.
Next.
Ankit, the logic is very simple. SME
Yes, sir.
listed companies are also using public money.
Yeah.
Sure, definitely.
Public stakeholders are there. So they should be equally applicable to them also.
Applicable.
Simply because of the size, it will not be applicable. You just say that.
At least Regulation 23 definitely should be applicable. Yes. Shivam, next. I think Shivam, this we have already answered. All transactions which were audit committee approval from under Regulation 23, this standard will be applicable. Yes, this is the pertinent question. I'll put this on to the panelist. Whether the standards will apply only to approvals taken after 1st April 2025 or transactions undertaken after the said date. So we are receiving a lot of queries as to the omni transactions which have for year FY 25-26 or thereafter, which have already been approved by the audit committees or which will be approved by the audit committee on or before before 1st April. Whether in those cases there is a need in terms of the circular to lay out these information before the audit committee. So I'll put it to all the panelists, starting from KSR sir. If KSR sir is there.
I think Ravi Chandran can give answer to this.
Yeah, if KSR sir is there.
I will say that any RPT placed for approval from the 1st April 2025, the information as per this standard is required to be provided.
Yeah, absolutely.
That's
And
all.
modification also.
Sir, yeah, why sir? The question also was whether if we are coming up with a modification later on, will this information needs to be provided? I don't think this detailed information needs to be provided in case of a modification.
I would say that for review or modification also, whenever it is coming up, approval of the modification also will require full-fledged information to be furnished to the audit committee.
Because there is no exemption, Ankit, we have provided in the format.
But sir, what will audit committee do to once the transactions are already executed and they are reviewing the transaction? What they will get out of the information if we place that information after the transactions are being executed? I think the core fundamental purpose of this information is to review them before approving the transaction.
Ankit, can I come here at this
Yes, sir.
stage?
Yes, sir. Please.
So first of all, this question itself is not correct because the ISF says approval,
Yes.
not execution of the contract. So if approval has already been provided before 1st April, the transaction is approved. Then there is no question of reapproval. So there is no time whether transaction should be consummated before 1st April. The
Okay.
second question, if there is any amendment or modification, then amendment or modification as per the law is a new approval. And if it is a new approval, then it will require the same level of information which is envisaged here.
Okay. And sir, what in case of a review, when you quarterly review these transactions?
So when you say review, that review, if you are not modifying, then there is no problem. But if you are
Yes.
modifying, then I need the same information.
Okay. So I think in case of review, we need not to have such detailed information. Amit, you
No,
have a different view?
when you
Yes, sir.
say review,
Yes.
what is the purpose of the review? If the purpose of review is to make any modification in the transaction, then you need all information.
Sure.
I
Amit,
think
you have any views?
maximum questions are there. Ankit, just take Amit's view because he's not a part of the committee. So can he just tell his interpretation?
I concur with what Gupta sir has mentioned. Only point I think we should also reconsider is regarding the modification of contract as is permitted under 23(2) itself. There is a separate mechanism provided for the modification. Whether it will not be too harsh to apply the same yardstick for the modification contract also, as Ankit was also indicating.
Can I come here, sir?
Yes, sir.
See, my principle is very simple. When I am an audit committee member or a board member, I should have seen that the contract is in the interest of the listed entity, is in the interest of the shareholder, and it is fair. I need not know what is the law because this is the logic. Now, in logic, you have to fit this thing. So if I had done my job and found that the contract is fair in the interest of related parties, they must, then any modification also I will be able to justify. The problem that we are envisaging is this, that suppose I have approved a related party transaction today without really getting into detail. And tomorrow I suddenly know that, oh, this was a logical thing that to do, that I should see how strong is my counterparty or whether I'm doing it at arm's length or not. That means I'm exposing myself to the fact that I did not do my duty previously. And I have no sympathy for the person who has not done his duty.
Madan sir, I'll come to you and I have come I'll put this question and another question. Madan sir, where an audit committee has approved the transactions today, they have floated
Ankit, Mr. Ravichandran wants to speak on this. Please allow me.
I think I am not able to see him. Sir, you want to say anything? Yes, sir.
I want to clarify that there is a full-fledged difference between review and modification.
Yes.
One is we talk about review under 23(3) in respect of omnibus approvals granted.
Yes.
In such a case, the purpose of review itself is omnibus approval has been granted. Quarterly basis review will give the audit committee the requirement to review this in all respects. It means it may even recall the approval granted. So review does not mean anything less than an approval process. Review, the purpose of review itself is, that is why they are specifically given for omnibus approval cases alone. Because it is matter of course we approve it. Later on we review the transaction. At that time we may find it should not have been approved. Then they can always recall the approval. The power of the audit committee cannot be undermined, in my opinion, to suggest anything less than a complete review, full-fledged review. The other point is modification. Any material modification requires approval, and if any modification is going to be placed for approval, full-fledged information to be given as per this standard is my view.
Thank you. Thank you, sir. Madan sir? Madan sir, you are there?
Yeah, he's there. Ankit, next, I think this is the maximum questions has come on this.
Sir, there is another version of this question is that if audit committee has approved the transaction and has called an EGM or has floated a postal ballot where the end date is after 1st April 2025, will still the notice needs to contain the information as per the existing circular or the new circular? This is also the another question that we are receiving from the participants.
The proper view will be when the notice goes based on any approval of the audit committee on 1/4 or anything after that. So if the notice of shareholders meeting has gone prior to that, the question of providing information, recalling notice or providing additional information does not arise. But mind you, the shareholders may raise questions on these points at the AGM if there is a platform for raising of queries and answering the same.
And I believe Jain Gupta sir, proxy firms are but reviewing the transactions basis these standards.
See, I tell you what we always feel.
They may not have information unless they are able to cull out from other sources.
Thank you. Yes, sir.
Yeah. See, we at proxy firms do not wait for the law to become effective. For us, logic is more important than the law. Now, if we feel that it is the law that is going to come from on this after giving a certain notice. Say, for example, if your standards had come on 1st February and any notice which has been issued after 10th February, then we will expect that the information that is there should be there. But we will not say against based that saying it is non-compliant, but we may say against based on governance issue. But we will always have a stricter examination parameters as compared to existing law.
Okay. So company subject to proxy reviews advisable to adopt to the new standards if they are issuing a notice today. So next is whether it will have an impact on material RPTs already approved in AGM 2024 that will continue till AGM 2025. Madan sir?
Yeah, of course, no issue.
No issues.
It shouldn't have any material.
Next, Shivam. Next, Shivam, we need to move quickly.
We can't ask questions from everyone. Or where there is a dispute, you ask. Otherwise, we have this 30 questions and 60 questions also already, or the 90 questions we have to give reply.
Shivam, we have already answered. Move. Let's move. This is done. Done. Move. Shivam already replied. Move. Shivam, move to next slide.
The previous one, whether was it answered the previous one?
Yes, sir. The approval is before April 1st.
No, that's with respect to some shareholder approval, my dear.
That was also discussed, sir.
Okay.
This is, I'll just read in the related party transaction, the approval audit committee, Shivam, last one.
That is done, Ankit.
That is the next, Shivam. This standards apply to all related party transactions. Okay. Will the minimum information? Yes. For omnibus approval also, all the information required is provided.
Okay, these questions are very important. You read slowly. Okay.
For omnibus approval transactions, will minimum information required as per para 4 of the standards apply? I believe it is applied in all the cases, whether it's an omnibus approval, whether it's a one-time approval. Transaction approval. Next, go. If a company is going to obtain omnibus approval for 2025-26 in March 25, will standards apply? We've already replied. If it is approved before 1st April, the standards will not apply. But in case of review or modification, as mentioned by KSR, sir, then you need to consider the standards.
There are so many questions on this issue. So let's clarify this. Any approval is already taken place, then you don't require. But if you want to modify something, then you require.
After 1st April.
Yeah.
On or after 1st April. Yes, next.
But I tell you, in March 2025, you are going to have record number of audit committee meetings to approve related party transactions.
Sir, in most of the cases, Omnibus approvals are taken before 1st April. So they would have either been done in the FAB meeting or
No,
would
But it is normal. So we should not think that, and then Gupta ji will take care. Next, Ankit.
Next, no, it is an exempted transaction. It will not apply. Next. What are the line items provided in para 4 of these standards? I think we have already discussed in the presentation. The copy is available. We will also share that. Balance. I think Shivam, these are all discussed. Next.
Ankit, just wait.
This one is important for the purpose.
Just go back. What is the balance sheet and profit and loss account? Just go.
So this is already discussed.
No. It's not the background. So friends, what happened? There was an issue relating to balance sheet item and profit loss item. There are few transactions are profit loss, remaining are balance sheet item. So SEBI's view is this, that profit and loss item can be judged quarterly in the quarterly result, but balance sheet item is coming in a year. So that's why they are more concerned about the balance sheet item. That's why they are putting more restriction on balance sheet item and giving relaxation in profit and loss item. So this is just background to tell everybody. Next,
Shivam. So this is an important question. For the purpose of determining the disclosure threshold, should the limits be checked for each transaction individually or in aggregate? Amit, you would like to take this?
Yeah, in aggregate.
In aggregate. So, for example, for a crore transaction, we have to aggregate all transactions, and if the value is less than crore, then residual, more than crore, then the different, and then other threshold, if it is a promoter or promoter-based entity. Am I right? Sir, you are mute. Sir, you are on mute.
Ankit, you are right.
It is only for the purpose of determining. Yes, it is to determine. Ankit, was I audible?
Yes, you are audible. Please speak.
So I was saying ki absolutely you are right. It is only for a limited purpose that what kind of disclosure mechanism you will be falling into.
Okay.
Whether
Next.
you will be in comprehensive one or in limited one or in minimum one.
Minimum one.
Yeah.
Next, Shivam. Payment of remuneration to a related party or other transaction which is not covered under line items B2 to B8. Does such transaction still needs to comply with these standards? I think the transaction with respect to A1 to A5 and B1 is applicable to all related party transactions that would require approval of audit committee. So payment of remuneration will fall under the transactions related to an related party transaction. So therefore, all information needs to be placed. In case of transaction.
Many of the questions, Ankit, I have already answered in the chat box itself.
Okay, sir. Sir, but these are already on the PPT. So
okay, fine.
Next question, Shivam. If a party becomes a related party in this year but had past transaction when it was not a related party, should past year details still be disclosed? Yes, sir.
Yes.
Okay.
Yes.
Next, Shivam. Whether all RPTs falling under any level of applicability matrix require certification from CEO, CFO, and promoter director? Is certification required for all RPTs or material ones? Sir?
All.
Okay. Next.
Ankit, one more thing for the.
Yes.
People must be surprised that promoter director it has added. So the point is that when we were discussing this issue, they came out that there is a management, CEO, CFO, and the KMPs, and then one is audit committee, But whose transaction is this? This is the promoter director. So the transaction is connected to promoter director and he is nowhere in the picture. So that's why the promoter director has come. So CEO, CFO and the KMP, their responsibility is diluted if the promoter is signing. Then another question came that if the two promoters are and they are fighting and they are not signing, for running of the company you require promoter's approval, promoter's signature, and one is not signing. So that thing also provided in the standard. In case there are two promoter, one promoter is not signing, then you just mention this statement to the audit committee that this promoter is not signing. Then audit committee will take a decision on the basis of all parameter which is mentioned. So that carve out is given.
So, but sir, what if as there was a question, what if the Jain sir also asked this question, what if the certificate is not available? Shall audit committee still can proceed with that after their own views, or they should reject it, send it back?
No. Why the certificate will not come?
For any reason, the question was asked by Jain sir as an independent director. If there is
For that, suppose CEO, CFO, promoter, director certificate is not there, then transaction will not come in the audit committee. Then why audit committee will approve this? But in case, because it is not possible that the transaction is connected to, transaction is connected with promoter who is not a director in the company, then this issue is coming. But if the promoter and director is there, and why he will not sign? It is his responsibility if he wants to get, because transaction of this will come through management and promoter director is a management. If it is not giving certificate, then what transaction will go? So I don't think if they are not giving any certificate, the transaction will approve.
Madan sir, you would like to add anything?
Ankit, suppose it's a program-driven approval, and for that approval, you have to feed 10 documents. If you feed 9 and you do not feed 10, the approval will not come. Same is the case with audit committee. If something is missing, why should they approve it?
So audit committee will say that why the promoter director is not who is interested is not approving.
No,
Then why should I approve? They can reject.
No, but technically there is no restriction that audit committee cannot approve. It's the call of the audit committee that audit committee wants to take a onus on themselves. They can take the onus and they can approve still.
Absolutely right. Absolutely. Yes, sir. You just tell if the promoter director is not giving certificate, then what will happen?
If the promoter certificate is not available, the same shall be informed to the audit committee and the shareholders if it is a material RPT as specified in para 1.1 of these standards. Therefore, even in these standards, there is only an information that such a certificate is not available. This does not preclude the audit committee from taking note of that and approving and going ahead with approving the transaction, which is RPT.
But the issue is whether in such a scenario should AC approve such a transaction. As Ankit or I know Amit who said it, that whether they are ready to take the onus on themselves of a transaction which promoter is not ready to approve.
We distinguish between management and promoters. We distinguish between obligation and responsibility of the committee and board of directors to work in the interest of the company, which is basically every director's duty. Company, an RPT may be approved, but maybe for a short period, maybe for some other purpose, because company's functioning is required. This question was discussed at the SEBI committee. We raised this issue that in such a scenario, will company's interest be compromised by the audit committee? No. They have all the means to find out whether it is in the interest of the company or whether terms are favorable and not prejudicial to the public shareholders.
Absolutely.
Next, Shiva. If one of the promoter directors is also KMP, can a single certificate? Yes, I think that should suffice.
Yes.
Next. Who will decide whether the certificate is to given by the CEO, CFO, or any other KMP?
Management.
Who is management?
Management. These all people are management, CEO, CFO, and other KMP.
Among themselves, they will decide?
All of the audit committee.
The audit committee will decide.
I believe, to my mind, it should be the call of the audit committee to require whose certificate they want.
No,
Okay.
audit committee will not go into all these things, sir. It is a management function. Let them decide what to give. We need one KMP certificate. Audit committee will not say CFO shall give, CEO shall give, and all.
It is their internal management.
And that's all. Let the management decide amongst them. There is a dispute. CEO shall take responsibility because he is ultimately the principal officer of the company.
Next, Shivam. If remuneration to a KMP who is not related to the promoter is material, should they sign their own certificate?
No.
Again, in concept of interested director or interested KMP.
So then I think audit committee will take note of this fact.
It's an interesting question here. Imaginarily, it's very nice.
Someone else will.
We used to say, no, one director resigns, the other director files the form. Later on, not in the current system, previous system, 1956. Then the other guy resigns and there is no director in the company. Both of them, आपस में they have agreed to file the form for one another.
Sir, currently we are dealing with a case where there is a transaction, which is a material transaction with KMPs and directors. All KMPs.
All KMPs. They have to disclose they are directly interested in the transaction because their participation at the board meeting or the committee meeting is held by a problem in 184, but the certificate requirement is not to be confused with their disentitlement to participate even after disclosure. The certificate is a self-certification placing onus on the individual saying, yes, the transaction as per this clause 1 are not prejudicial to the interests of the public shareholders and are not unfavorable to the listed entity. This is a self-certification. This has got not to be confused with a right not to participate, disentitlement from participating in board meetings and committee meetings.
No, but Ankit, can I step in here?
Yes, sir, please.
No, my view is slightly different. You see, a remuneration of a KMP may go through NRC even at times.
Yes.
If NRC has already approved it, where is the problem in his remuneration? I think we have to start looking at it from that angle also. We cannot put NRC against audit committee under any circumstance.
Definitely.
NRC, if has approved, and that's also consisting of the independent directors also. If they have approved, I think that's the final thing. Now, उसके बाद क्या जरूरत है कि remuneration के लिए वो certificate नहीं दे सकता? I think he can give a certificate and he can say it has been duly approved by the NRC. Where is the problem?
Okay.
That's the way I look at it.
We are not supposed to be giving any caveats and exceptions not seen on the words or letter of the standard.
No, but
yeah, but as a management, sir, as a management, they can take that call.
उसमें ऐसा एनआरसी ने अप्रूव कर दिया, उसके बाद मेरे ख्याल में हम उसको चैलेंज नहीं कर सकते रेम्यूनरेशन को. इसमें कैविएट की कोई बात ही नहीं है. उसकी रेम्यूनरेशन अप्रूव हुई है, उसके बाद वो सर्टिफिकेट कोई भी साइन कर सकता है. उसमें क्या है? Because that is a factual information which is being furnished.
Sure, sir. Next move.
Next.
All RPT certificate is required. Next.
Ankit, please answer clearly. Otherwise, people will not come because they have
all certificate, all transactions will require certificate. I have replied as
yes.
Is certificate required for all RPTs or though on only material? All RPTs will require this certificate. Next.
Yeah.
Should the certificate be transaction-wise or consolidated, or for all transactions placed for approval? I believe
transaction-wise.
It can be either ways.
Yeah, certificate means application of mind.
Yeah.
Next, Shivam.
सिर्फ 31 मार्च 2025 तक ही है. Super savings, super delight. आज ही अपने नजदीकी.
Wait, internally some noise is coming.
Yeah, somebody's.
Yeah.
Okay. So, how should indirect shareholding of 2% or more by a promoter or promoter group be interpreted? Should it be calculated up to ultimate beneficiary level, or should promoter group entities will be considered individually or together?
Ravi has introduced this, so Ravi has to give answer.
Yeah, I think the standards are very clear on this. I don't think there is a requirement of ultimate beneficiary. KSR sir can add further light.
Because he can tell the background.
The shareholding of 2% or more by the director, by the promoter, could be through his relatives also. Therefore, automatically it is directly or indirectly. Indirect shareholding means you hold the shares. You hold it through somebody who is your close relative or something. So therefore, it's a question of fact. I always say that if it is indirect shareholding also, it should be covered. That is why it is ultimate beneficiary level or not. That question arises. Suppose indirectly somebody is holding, but that person is not holding beneficial interest. Then again, it is a question of fact. Promoter group entities should be considered individually or together. Yes, individually or together, both are applicable. Idea is, are you holding 2% or are you having control over 2%? Directly, I am holding no questions. Indirectly, I am holding, I have some control. So this is a question of fact where the person has to come clean and say, yes, I hold this 2% control. That is how it has to be looked at. We cannot slice it and then say, because it is individual promoter entity, nothing is there. Put together voting right, you will be able to exercise 2%. That is how we see. That is why I think our Jayan Gupta sir was saying it is not the letter of law which is important.
Yes, Ankit, next.
Next, Shivam. I think KSR sir has already answered. Next. For renting of a property to a related party, how should the justification be provided if the entity does not wish to rent to outsiders?
If the entity does not wish to, means it is the individual's wish. It is not the company's wish.
Ankit,
The
issue came, the background I'll tell you. What happened, there was one case has come to SEBI where the property value is 200 crore and they have given on lease to the related party. So who has invested money? The company, listed company. And who is taking advantage? The related party. So that's why on the lease item, renting of property and related party, so if you are not giving to outsider rent, okay, it is okay, you can give, but rent you will charge properly, na? It is not that you have a 200 crore property and you are saying 5 lakh rupees per month rent you will give. So it's not a question. You can say I will not give, but I am giving on market value to the related party, but that's all you have to check. Am I right?
No, why should it be given at the market value? Suppose I don't want to give it to anybody. I want only my related party to use it. I don't want to give it on rent, but my related party wants to use it. And
that is not allowed.
Supplementing.
That is not allowed.
Supplementing board's decision to individual's decision.
Pardon?
You are supplementing board's decision to individual's decision. You
means company here.
Yeah,
company doesn't want to give it on rent. No. Company want only my premises are there. My premises are vacant, but in case I allow my related entity to use it, not to anybody else, because there's only confidential issues. Maybe part of my office I want to be used by related entity.
But is there any provision of renting it out to related party? Nothing, no. That is why they are asking for justification. Pawan, you will be able
justification is fine. Justification is fine.
I will explain one more point, GB. The point which was raised is we are having in this standard on the bids aspect of this. There is a specific requirement of disclosing in the case of bids why we are selecting a related party for the transaction, even though several parties would have submitted the bids. If you see B214, this is the answer given there. Therefore, a related party may be preferred in certain circumstances because if somebody else comes, we cannot vacate. we cannot expand our facility. At the same time, until expansion is decided, we cannot leave it vacant also. Therefore, justification can always be provided to enter into transaction. Therefore, inference is A. There is no prohibition of giving it on lease only to related party. B. Why related party preferred is a justification matter.
Yes.
Rent, of course, is supposed to be arm's length. That's all.
Yes.
We can go to the next question.
Next, Shivam. Whether bank guarantees given to a related party against work orders will come under these standards. Amit?
I think, should not they be covered in B5?
Okay.
Yes. Yes.
Next. Whether lease transaction with a related party would be a balance sheet item or a P&L item. I believe P&L item.
No, this is P&L item. Now I'll tell you background. This is a P&L item, but all practical purposes, lease item, because the asset is of the listed company, it is giving on lease. So what is happening? You are investing money. Lease is a P&L item, but if you see this is only one exception. Lease item is treated as P&L item for this format.
I will tell you one illustration. Pawan, can you permit me?
Yeah, please.
Because we had a heated discussion or some intense discussion at the SEBI board. The one case, a company lends money, advances money to the promoter for purchasing land at a place where they want to start their unit or division, showroom or whatever it is. So the related party is getting the funds of the company as loan, of course with nominal interest. Land is purchased. Money is lent for construction. Building is constructed. Let it on lease to the company only. So therefore, there are transactions which are actually P&L in terms of its terms, but they are balance sheet. So this has to be studied whether it is balance sheet item or P&L item. When somebody is asking me, there is a confusion whether it is P&L or balance sheet, I advise them to go to para number 1. Underneath that, there is the applicability matrix. Balance sheet item, complete disclosure, comprehensive disclosure, apply that. That's it. I have answered the question.
Ankit, now there are 66 questions. You have to give answer fast because
Next, Shivam.
The questions are over.
Okay,
Now,
I'm coming on the questions on the portal.
And so, Ankit, those questions we have already answered. You just
Yes, I'll not reply. I'll reply. Okay, first is entered. Not what is the prescribed format of CEO CFO certificate that is as given in the standard itself?
No, it has not given. What I'll
The content is given in the standard.
Content, no content will.
No content. What they need to certify, that is the content that is there in the standard.
So you have to. There's no format, but when we will talk to SEBI, we will try to get the format of this also.
Okay. On the some questions on royalty, can you give more clarity on benchmarking requirement for royalty?
The benchmarking requirement, what happened? There are 2-3 aspects. One is you are giving royalty. So in the format, there are 3 things. One is that if you are paying royalty, by India is paying royalty, then there is a one point that what other countries are paying royalty to this company, that you have to write. Because sometimes what is happening, India is paying 7% on other countries, other jurisdiction is paying 2%, 1%. The question is why India is paying high. That is number one. Benchmarking is that you have to take 3 peers. Okay, and 3 peers, which I have explained to you in my presentation. First, you have to take a listed peers, then international listed. Then what the SEBI registered research analyst is identified that company in that peer. Or if it is no peer, then you have to just mention the justification and mention that there is no peer available.
Okay.
Yeah.
Okay, next is if the proposed transaction is related to an investment, Then the additional details provided in B3 must be submitted along with details in B4.
No, it is not. Because B4 and B3 is a two different transactions. So
Okay.
it is not.
Value of the proposed transaction as a percentage of the listed entity's annual consolidated turnover for the immediately preceding financial year. While passing the RPT for FY 25-26, the preceding year is FY 24-25. But while seeking approval during March 2025, the turnover as on 31st March is not on record. What is done in this such case? I think then they should take it off the 31st March of 2024.
The last audited consolidated financial statements. That is how we look at it.
Those which are available, you have to rely on that.
That's
Okay. Do we need omnibus approval? KSR sir, 2% promoter investment, it is directorship plus 2% holding for promoter, or if any one condition also satisfied should be considered as a promoter entity in which promoter is interested.
yeah, anyone.
Okay. If in the applicability matrix, if the related party transaction pertains to non-promoter group and the transaction falls below the threshold outlined in paragraph 2 ABC, which head in the matrix shall apply to the transaction. Long question, we'll apply it separately.
Residual.
It's a long question, we'll apply.
It's a residual case.
Okay. Is taking bids now mandatory for all transactions?
We have clearly said in the standard if bids are not invited, explain that.
Okay.
Ankit, again.
Yes.
Bids are invited. Suppose you are not able to invite bids, or suppose the bids are not in a position to invite, or something, some issues are there, then you just explain to that why you have not invited bid, and whatever transaction you are doing is not harmful to the company. That's all.
If number is less than 3, B13, it is written clearly.
Okay.
One is the question, Ankit, that take omnibus approval for in the format only.
Yes, that we've already replied, sir, during the course. If shareholder approval is required only for material transaction, then how it is ensuring better governance? It feels more paperwork than compliance.
This is not under the standards, so we skip this question.
A listed company on a regular basis sells its products to its subsidiaries, including WS, at a prevailing market price at which it sells to other customers. There cannot be a bidding process for such sale of goods. How to address the requirement?
No, wholly owned subsidiary is exempted now.
No, exclude wholly owned if it is not a wholly owned subsidiary, just a subsidiary. Question is, I am selling my goods regularly to my subsidiary at the price to which I also sell it to other customers. Why should I obtain bid?
But don't obtain. Just inform to the audit committee that this is the same price I am selling to this. Say Hindustan Lever. Hindustan Lever is selling something to the other vendor and the subsidiary. It's okay.
Okay. Company X and Y are related parties and both are having receipts and payments within the group. How the limits to be considered? That is, can the company adjust the receipt against payment, then to check the limit? No. Separately. Certification from a director who is part of the promoter group, not promoter. Will that work, or will that is also required?
Yes, if there's no promoter directors directly, but their representative is there, it's sufficient.
No, but so if a promoter, if an individual who is a promoter, part of the promoter group, is the director on the board, then he's not a promoter director, I believe.
No, he's not a promoter, but there's no promoter director, but there is a representative there.
No, but the requirement is from the promoter director.
No, that is right, but there is no promoter director.
So then there will be no certificate.
So no certificate, but suppose I am appointing you as a director, you are representing me. Then
but
you are
captured that you are representing me. Madan sir, Amit, you have any views?
We have answered it in the chat box already.
So still others can also hear.
No, anybody who is a director and classified as promoter is the definition of promoter director for this purpose.
Okay. Promoter
That's all.
group will not apply.
Next question.
Okay. If my company paying rent to his group company where common director to company, this case no clear.
Next.
But bids can be invited for capex item, but for not to day sale of product goods.
Ankit, again I'm saying bids are not compulsory if you can give explanation.
Okay.
Bids are compulsory. First is bids are required. Suppose you are not able to do bids, suppose you have some problem, then you have to give explanation, that's all.
Okay. Where promoter is a body corporate and have nominated persons on the board, whether they will be called as promoter directors?
This has been already answered that a director who is classified as a promoter is a promoter director for this purpose.
If the transaction is not falling under both balance sheet and P&L, what will be the disclosure requirement?
No, this profit and loss and balance sheet item is not the criteria. This is one indication. So if the transaction is RPT, whether it's a profit and loss or whether it's not in profit and loss, you have to disclose.
Well, beautifully stated, Pawan. I got clarified. Thank you.
Okay.
Wonderful.
Can we say because independent directors failed in their duty and responsibility, this format is brought and applied on the company and the promoters?
We didn't get the question itself.
Can we say because independent directors failed in their duty, therefore this format has been brought for the company and the promoters?
No.
So that independent directors can do their duty much.
No, people are putting wrong question. This is a wrong question. You are putting responsibility on independent director. The independent directors are not aware what I to ask, what not to ask. Sometimes independent director is under pressure. So whatever you are giving, they are approving. They are saying, okay, they have certified. But now the format is there. So in ILFS case, the promoter directors, both the directors or independent director are also involved in this. So it's a combination of things. It is not a format has come just because of failure of the management. It's a failure of the independent directors also.
Okay.
Ankit, I would like to respond to this.
Yes, sir.
You know, in April 2017, the then SEBI chairman gave a statement that audit committees are not working and independent directors are not independent. Then he constituted a quota committee. Then quota committee gave recommendation. LODR was amended. Amendments were to be implemented over a period of 3 years. Just before the expiry of 3 years, SEBI again came out with a discussion paper on 1st March 2021 that there are still questions on the efficacy of independent directors. Again, new LODR was amended. Now they say that on the audit committee, only independent directors shall approve the related party transaction. So when you are expecting independent directors to approve the related party transactions, are they not entitled to more information before they take a conscious call, before they take an informed decision? It's not a failure. Rather, we are entitling them. We are making them more powerful before they take an informed decision.
Thank you, sir, for the detailed response. When seeking omnibus approval, some information, example, line items of B2 may not be available. So how to manage that situation? Anybody?
Can I open you?
When seeking omnibus approval, some information may not be available. So how to manage?
That you explain. That's all. Why it is not managed? Why it is not available?
Okay.
Ankit ka question, how to manage?
No, somebody has asked question. Ankit is converting that
Whether receiving investment from any related party is also covered. Receiving investment is not covered. Making investment is covered. One is detailed. Okay. If any related party transaction will be in benefit of both shareholders and promoter?
Pass.
Pass. Requesting you to please explain the sublease point again. I didn't understand your point, sir.
The sublease point. Acha, no. KSR has explained. KSR, please explain.
No, lease or sublease, we have to remember the property is of the somebody else and company is letting it on lease if it is company's property. The company's property itself is only leasehold rights and it is subleasing. The transaction is a sale and disposal squarely covered. That's all I am saying. So what company owns, it is letting on lease to a related party. It owns leasehold rights, it subleases.
Okay.
I
Can you
hope
give
that
some
is clarified.
clarity on royalty audit committee to comment on the reasons for less dividend payment than royalty payment?
Ankit, there was a very clear point that you are giving 100 crore rupees royalty and you are giving 10 crore rupees dividend, or you are not giving dividend. So the question is, it is not restricted that you can't give royalty and pay dividend. It is only disclosure that I have to show that I am paying 100 crore royalty, but I dividend is only 10 crore. That's all.
Yeah, you go to the serial number 78, B878, it clearly captures the need for dividend paid in last 3 financial years as percentage of net profits. The audit committee to comment on the reasons for less dividend payment than royalty payment. The situation was captured nicely by B878.
Okay.
Again, on this, my question would be whether royalties as a percentage of profit or royalties as a percentage of turnover or royalties fixed.
I
No.
remember,
Madan, royalty paid on turnover,
Right. So,
or it may on profit also, but
right.
every is taking on.
Dividend is payable out of profits only. If there's no
That's,
profit,
so
certainly
that's why.
there's no dividend.
No, it's not a question. So that's why they are saying you are paying royalty to somebody on turnover, but there's no profit. So it means that product is not up to the mark. It is not good. That's why. So
Not necessary. Not necessary. That product is not up to the mark. That may not be
Aman,
necessary.
can I come in?
Yeah, please.
I mean, somebody may make out a case that you are getting that profits because of your technical arrangement with the party, for which you are paying a royalty. Royalty is a balance sheet item. Oh, sorry, it's a P&L item. Dividend is below the line. You are sharing the profit. So I personally feel there is no nexus between payment of royalty and the payment of dividend.
No, sir.
I think we need to.
You are right. There is no relevancy for this. It is only disclosure to show that you are paying royalty, but your profit is down. So, what
So
profit you
how can you say profit is down?
No,
10
sir.
करोड़ रुपए अगर जो आप एग्जांपल दे रहे हो 10 करोड़ रुपए मे बी कंपनी इज मेकिंग दैट प्रॉफिट बिकॉज ऑफ दैट टेक्निकल
Let me just clarify again. You are paying royalty to somebody, to your parent, and you are paying dividend to the shareholder. This is only disclosure. And what is the logic why you are paying less? That you have to write. That's all. Because the question is, you have no profit, or your profit is less. That's why you are not giving dividend. So there are two reasons. One is you are paying. You have a profit but not paying dividend, but you are paying royalty. Second is you are having a less profit, that's why you are not giving dividend. So the question comes that if you are paying the huge royalty and the company is not getting benefited by this, then what is the purpose? And this is only
dividend payment is as per the company's policy on payment of dividend.
Yes.
Some companies may make a lot of profit, but they still not pay dividend because they want to be conservative. They want to conserve that amount for expansion and modernization.
They can write this, sir. They can write this that we have given no dividend, we have given less dividend because we are using this money for the development of the company. They
I
can write
agree
that.
with you. What you're saying is right, but I'm just trying to understand and educate myself. What is the nexus between royalty and dividend?
There's no
Payment
nexus,
of
sir. There's no nexus relating to line by line item. But the nexus is to just show this that you are paying royalty, but your profits are not there, or you are not paying dividend to the shareholders.
Okay.
Sir, I just want to add clarification here. because SEBI has brought out a research paper on royalty payments. And several cases SEBI found 1/3 of the profits of the company has been diverted in the form of the royalties paid. And in fact, if my memory is correct, Jain Gupta sir was pointing out a very beautiful fact that in one of the cases, the royalty is applicable to one particular vertical of the company's business, whereas royalty is paid on the whole of the turnover. And SEBI's paper brings out all these issues. Therefore, we are trying to present information to the audit committee as well as shareholders. What is the dividend? What is the net profit? What is the royalty? And that's all. So let them take a call, let them understand. This is the rationale.
Sir,
Okay.
we are done with almost all the questions. All others are repetitive, and there are some detailed questions that we will have to reply offline because it talks about detailed transaction. So, in terms of the questions, we are done. I'll just, we are already above the timeline. So, we like to close the session. Before closing the session, like to just take 30 seconds from each of you and share your views as to how they should, professionals, both at corporates and at practicing or other way, how they should treat this RPTs and should try to create what kind of SOPs or what kind of procedure they should create to make their life easy.
Ankit, I will take 61 minutes, not 30
So
seconds.
61 minutes, 9 seconds.
61 seconds, okay. So, for the benefit of everyone, what we are doing as a chairperson of this standard subcommittee of this RPT, I will try to talk to SEBI and we will come out all these FAQs and we will circulate. So, this confusion should not be there in the minds of anybody. The confusion is not on the reading side, confusion is on the basis of implementation side. So we'll try to solve this issue by doing this. Today you have asked question, and in the last program also you have asked question. So some questions are repetitive, but whatever you have asked, Ankit, the team will try to send you the reply, because some questions are very big, and that questions we don't normally reply. So please give us small questions so we can give in a very short period. All these questions you can write to us, we will give reply. There's no charge for this replying, so you can send it to us. Okay, it will be helpful. So Ankit, my time
Yes,
is
sir,
over.
sir.
I just want to add just one thought only, in which last time also I said it is premised on two important parameters or drivers. One, in the interest of the company. Two, not prejudicial to public shareholders. This is the way we should look at this information sharing. Mere formality has become functionality. Ownership has been created on each of the echelons like management, audit committee, board of directors, shareholders, and regulators also. They cannot now keep quiet for 5 years and then come back and call you or haunt you. Information is there. If you have not done your duty, SEBI's decision, the Supreme Court decision on limitation in the various cases of SEBI will be applicable. Therefore, functionality is introduced, formality is eliminated, ownership obligation is created, protection of interests of the company and public shareholders is created. Therefore, with that perspective, if you look at it, line item difficulties will go by the wayside. Thank you.
Thank you. Jain, sir.
My take is that independent directors are on the edge. Absolutely, I am telling you, it's a very, very onerous task, but very positive, forward-looking, and I think this was the need of the hour. So congratulations to Pawan and team and all the members of that subcommittee. But I would make one or two suggestions. You need to do hand-holding exercise. Hand-holding of the independent directors and members of the audit committee, because this is not an easy task, I am telling you. I sit on the 3 or 4 audit committees. It's a huge, huge task. We'll have to sensitize people, we'll
Yes,
have to
sir.
educate people,
Yeah.
we'll have just let me finish. So it's not an easy task, easier said than done, but when you sit on the committee, there is a certain equation between the independent directors and the management. The independent directors are in the middle. On the one side is the management, and on the other side are the regulators and public shareholders. So they have to balance it out, but not an easy task. So do some workshop for independent directors. We want to learn, we want to educate ourselves, we want to prepare ourselves how to meet this challenge. That is one. Second is, what we have discussed in last 2 or 3 sessions is I think most of them are professionals, who are going to implement this. But we have not yet taken or as far as I know, reaction from the industry. Although these standards are by the Industry Standards Forum, so they are supposed to be a part of it. But that is more theoretical, because people who have been instrumental in formulating it are the professionals, not the industry leaders. I think we must take them on board. How do they perceive it? We are saying cumbersome information, all this has to be done by the management, by these people. So how do they react? They may have a concern, they may have some useful suggestions. So I think all that should be taken, in my view. It ought to be taken, we must engage in some interaction and discussion with them and take them on board. And wherever it is possible, we can address their concern. We should address that concern. So this is my view. And
Yes, sir.
congratulations to you all again. It's an intellectual feast, absolutely.
Sir, we will do the program of independent director, and we will request you just give us your point of view as an independent director, what you want to understand about this. So we will have a separate workshop, and all our professional will be there. We will tell them how to do this. KSR, you want to say something?
I just want to inform Jain Saab that he has brought out this important point of B214 and B321 in contradistinction with B333 and B515, where the audit committee justification and management justification. It is a very interesting point you have brought out, and at the same time, now you are reminded it is a sandwich time.
Madan sir, your views? Then I'll end up with Amit.
Whenever a new compliance is introduced, criticism is there. I remember when sectoral standards were introduced, all around criticism was there, but we embraced it with open arms. And now these sectoral standards are being quoted in many court cases, be it 241, 242, or even in insolvency and bankruptcy matters also, that the meetings were not held properly, notice was not issued properly, minutes have not been properly, their authority to sign the application has not been there. Now, this day in and day out, the standards are being quoted. But I tell you, this particular standard which we are discussing today is in the interest of governance. It's in the interest of transparency. It's in the interest of disclosure. It's in the interest of independent directors. And more than that, because all of us are professionals here, it's in the interest of in-house counsels or in-house professionals. The recognition which they are going to get out of all this, I think that's tremendous. They are going to be indispensable for any organization in the times to come, and we need to acknowledge this fact.
Thank you, Amit.
Yeah, thanks, Ankit. I think we need to look at from two perspectives. First perspective is from the regulator perspective. Also, we need to have a correct mindset that related party transactions per se are not bad. If we think that related party transactions are per se bad, and why there is a necessity to have a related party transaction, I think this regulator cannot decide that why the company needs to have a related party transaction, because that is its own business call. I may have created 200 subsidiaries and I'm doing my transaction with those 200 subsidiaries, and that is my business requirement. How I am doing that transaction, whether I am in transparency as per the regulated norm, that is the outlook of the regulator. Now, coming to the point of the concern of the industry, one major concern, because now it is the reality, it is the law, we can't undo anything. The only concern which is coming from the side of the industry is one, are directors in a position to consume this voluminous information and take appropriate decision in the given time span of time? That is the only worry that the industry is having. I am, as a professional, I can say, and I can proudly say on behalf of all professional, there is no capability dearth, whether it is a PCS, whether it is a company secretary engaged in the company itself. As far as 88 line item information is concerned, whatever information is there, whether 3-year data, 4-year data, bid and everything, all data can be compiled. That is not going to be a challenge. The real challenge is going to be after the information is compiled and provided to the director, how he is going to find out what is relevant. Because what I understand, maybe I have a very little experience of last 22 year odd. The audit committee looks into transaction from two standpoints. One, whether the transaction meets the requirement of arm length. Second, whether there is any conflict of interest or not. To arrive on these two conclusions, and perhaps couple of more may be also there, he has to run through that much volume of information, how we will be able to create that kind of skill, I think, or something other requirement may be there. I think that we need to work out. That is the major concern which is coming from the industry side. That's it, Ankit.
So thanks everybody. Just for the participants, I believe the questions that still remain answered, we'll compile them all of the questions and we'll try to revert on them by next week. Next Friday is Holi, so we would not be there, and then thereafter on 21st we'll be back again to discuss and come with another webinar on, I believe, on data protection law. So we'll discuss that. I thank all the participants and panelists for spending their time today and sharing their views, specifically KSR sir, NK Jain sir, Madan sir, Amit, Pavan sir, only present in all the webinars. So thank you. Thanks for your time. Thanks, everybody. Enjoy your weekend.
Thanks to you and wish you a very happy Holi.
Thank you.
Thank you.